Let's start off on the yuan because it is really quite unusual to see these levels of trading. Do we see yuan intervention now on the horizon? Are policymakers kind of signalling a greater appetite for yuan weakness?
Yeah, I think it's quite clear that after the 20th Party Congress on Sunday, so market is voting for no confidence for China's upcoming leadership. I'm not saying that whether that's going to be the case or not, but that's what the market is telling you. So we can see the offshore yuan basically dropping yesterday, and now we're talking about 732. So again, it's a record low against the dollar. So the key, of course, is today we're going to see whether the fix will stay at 711, 712, because that's the anchor for the onshore rate, meaning that an onshore rate at 2% limit, we're talking about 726 to 727. But still, the offshore at about 7.3 means that market is still very bearish on the yuan, and any signs that the fixing is going to drift higher will actually create more headroom for the dollar CNX for now. So it's still more or less the same, and market will continue to stay bearish on the yuan, at least in the very near term.
Stephen, is that the case for the Japanese yen as well? What is this new currency intervention playbook by authorities in Japan when we're seeing them perhaps potentially act outside of regular trading hours?
It's more or less the same for the dollar yen. It has been the same story this year. It's the widening dollar yield against Japanese yield. And as long as the Fed continues to hike and the Bank of Japan stays with its yield curve control, then we don't see a reversal in the dollar yen. It's just a matter of pace. Now, of course, when we talk about levels, 150 is certainly a level that market has been watching last week. If we talk about pace, then let's look back at the last intervention on the 22nd of September. So basically, the yen dropped for more than 7% before during August and September 21st, and then we saw the BOJ acting. And since then, last Friday, again, another 7% drop. And hence, the BOJ came in at just below 152. So going forward, I think what the BOJ could do or will do is just to slow the pace of the drop in the yen. But the trend is still the same. Like, there's nothing much they can do, either explicit FX intervention, whether they use reserves, whether they use the foreign reverse repo balance with the Fed. It's just about slowing the yen drop. But it's very hard to reverse the trend unless any fundamentals change in Japan.